let me bring on board Naresh. Naresh, hi, afternoon. What is your reading for the index and the fact that financials are lagging?
So the lagging is not pretty large. We are still holding on. We've been a slow drift for stocks which have done well. So ICICI Bank, which moved up, has slowly drifted lower, closer to 1120, 1130. It actually is a strong support level, could actually break out. Then you look at the next weight, even Axis Bank is a slow drift. Then we go to the largest weight, which is Reliance Industries, which has been making a very tight consolidation between 2880 and 2980. If that breaks out about 2980, that itself could give the whole fillip to the index as such. So overall, we are still around that breakout points for a lot of stocks in the large cap category in the heavyweights. It's only Kotak Bank which has really broken down. Even HDFC Bank has been holding on to the 1500 mark. So overall, the bias is positive. We could see a momentum come in over the next few sessions on the index as such.
Waiting by for that momentum, but for now the momentum is with the likes of Jana Small Finance Bank, because that stock is perking up as we speak. Dabur, which is a result reaction, so clearly the street digesting that volume number of 4.2%. That is something which is seeing a bit of a spike as well. We're also watching out for Sobha, because the rest of the real estate packs, the like of Max Estate, etc., has been doing quite well from the start of the day, but now Sobha is also participating a bit. Let me throw that question regarding financials to Sandeep as well. Sandeep, Kotak Mahindra Bank, I think the concerns really continue right from the fact of what happened earlier when the stock had seen a dip of almost 10% to the fact that there is this leadership flux which is there a bit. What's your take on the private banking names?
On the private banking names, the preferred picks continue to be ICICI Bank and Axis Bank because of their performance as well as the quality of the growth value of the subsidiaries as well as and growth outlook. Now, Kotak Bank specifically has been facing issues, especially the restrictions put by RBI, I think, were more concerning. Smaller management changes can happen, but unless and until that lead to a change in growth paradigm or spike in NPAs, we shouldn't be so much worried. So I think this correction in Kotak Bank could possibly take it to levels where it becomes a buy candidate sooner than later. So I find this fall quite interesting. I'm looking at it and looking to buy on some more dip rather than not buy the stock.
What's the reading on the chart? It's already at 1577. A fair amount of price damage perhaps could be behind us. How much more to go?
Yeah, so I think so far the good part is that the incremental sell-off is not as much for Kotak Bank as it was, I think, last week or so when the stock had fallen down by a margin of 8 to 10%. So I think that's a good part. So far, the volumes today for Kotak Bank is also on the higher side. And the encouraging bit is that the indicators have started to come back into an oversold territory. Now, what actually we typically look out for is that after such kind of a sharp 2-week price correction for Kotak Bank, whether there is an initial jump in terms of volumes and the prices stabilize, or whether there is an incremental kind of a correction and the volumes tend to just be a bit more on the average side for the stock whenever the stock consolidates. I think that's the pattern which you're looking out for. Hopefully in the next maybe few trading sessions or in the next 1 or 2 weeks, we could probably get a lot more clarity. But the only good part is that the stock has come back into an oversold territory, which means at least from a short term, the major part of the pain seems to be out.
Okay, so that seems to be the consensus view, that the stock is a bit oversold and entering the buy zone very soon, both in terms of the fundamentals as well as the technicals. But Sandeep, what's the view on the power sector? I mean, the results of REC weren't as gangbuster as the kind of reaction that we have seen on the stock price of 20% move. And not just that, PFC, of course, that one is moving, and Power Grid as well. It's one of the top gainers at the index level with 4% move.
Yeah, so it's very difficult to explain the movement in many of the PSU stocks. For example, when crude oil prices are rallying and went above $90, many of the oil marketing companies were actually moving to all-time highs. So I think there's a frenzy in PSUs. So one-to-one correlation of results, fundamentals, etc. to these movements is very tough these days. But I think given the business model, etc. of PFC, REC, and the way they have moved, it's very tough to justify these valuations at this stage.
if you've taken a look at what's really happening within Motown, and I want to specifically talk about CVs because looking at Ashok Leyland numbers, seems like there's a good recovery in place. It's an uptick of 10% that they've posted for last month.
Yes, I think we can't say this is a recovery for the entire sector because Tata Motors numbers have been different and Eicher numbers also were different. There's no broad-based recovery per se, but a 10% volume growth in a scenario where the CV cycle is right now going through a consolidation phase is positive. So I think if they are able to sustain this, then it will be good for Ashok Leyland per se.
Advice to investors in Godrej Properties right now, because clearly the power has changed hands while the property in question is that 3,000-acre land bank in Vikhroli, but it was always a joint development model that they were following. But now, of course, that gets handed over to Godrej and Boyce Group.
Yeah, so ultimately, what shape that will take, whether that property gets developed or not. So I think that's something, and whether they actually go in for joint development. So I think still unclear in my view. So because I think that land, the development of that will also require a lot of approval, etc. So let's see how it goes.
In the latest earnings that has come by, Sandip, anything that stood out to you? A lot of smaller IT companies has delivered very strong set. The likes of IndiaMart, etc., are also coming back after reporting weak set earlier. Anything that stood out to you in this leg of earnings season?
So in the mid-cap IT, KPIT is the one which continues to do very well, but they also indicated some slowing of growth. So to that extent, the current valuations could factor that in. IndiaMart results had some extraordinary elements, so I think the results look much better than expected. The overall growth, I listened to the management, etc. So it didn't seem so exciting as what the markets got excited about.
Figure out exactly what the management says and what really excited the market. Here's the management of IndiaMart.
The operating outlook for the next year looks better because one, we have been able to get some handle on the margin. Our margins for the fourth quarter used to be 26-27%. We have been able to do on a standalone basis a margin of closer to 30% this particular quarter. And the management team is confident that we should be able to maintain a margin of 30% here on. On the customer addition front, I cannot give you any guidance for the next quarter or so, but I am pretty confident that in the next 2 or 3 quarters, we should be able to get back to our normal growth rate of 5,000 customer addition per quarter per month, per quarter net addition. Once that happens, then our collection and revenue will also start to improve. So for the entire year, we are looking for a recovery from the lows of the last 2 quarters after in the H2 of the FY25.
Back with closing trades and so many numbers to try and digest. Here's the management of Adani Ports and Special Economic Zone, the CEO, Ashwini Gupta.
APSEZ has delivered its strongest ever operational and financial performance in FY24. We have outperformed against the cargo, revenue, and EBITDA guidance provided at the start of the year by 6 to 8%. Thanks to our customers, shareholders, and other stakeholders for maintaining their firm confidence in APSEZ's business. Some highlights of the year gone. Firstly, on ports. APSEZ handled 420 million metric tons of cargo in FY24, which is 24% year-on-year growth. In India, our cargo volume grew by 21% year-on-year, which is 3 times the average Indian cargo volume growth rate, hence contributing significantly to India's growth. Given the sweating of assets, our domestic ports business EBITDA margin expanded by around 150 basis points to reach 71%. Next, our logistics business. The rail volumes jumped 19% year on year to reach around 0.6 million TEUs, while bulk cargo volumes increased by 40% to reach around 20 million metric ton. During the year, we launched the trucking business segment with a fleet of around 900 trucks to provide last mile connectivity to the customers from ports, ICDs, and customer premises. Now, let me discuss the financials for the full year. Our consolidated operating revenue increased by 28% to reach rupees 26,711 crore. The consolidated EBITDA, excluding Forex, grew by 24% year on year to rupees 15,864 crore, and the profit after tax jumped 50% year on year to rupees 8,104 crore. Talking about our leverage, despite a capex of over rupees 7,400 crore during the year, our net debt to EBITDA ratio improved to 2.3x, below our guided range of 2.5x. An update on annual dividend. For the financial year 2024, the APSEZ board has recommended a dividend of rupees 6 per share in line with our capital allocation policy.
Management of Adani Ports and, of course, the stock as well post its numbers. Let's just take stock of what else is happening in the market. While the index continues to be extremely quiet, a lot of individual consistent movers are the ones which are seeing a move. Actually, no, even the index has seen a bit of a pickup. I stand corrected at that. About 60 odd points up in the green is where we're currently at. Asian Paints has picked up nicely. BPCL, of course, has been firing from the word go. 5% of an uptick roughly is what it's seeing now. Bajaj Auto has been very strong, almost a 3% uptick there. Tata Motors, M&M after that big move on Tuesday, about a 4% uptick on the stock. Right now also it's seeing another 2% of an uptick roughly coming in. And then, of course, Adani Ports, Adani Enterprises are all holding out. Still no recovery for Kotak, Bharti, Axis, HDFC Life, Bajaj Finance, Infosys, Innocent Bank, and even ICICI Bank, which is now down nearly 1% as we speak, just a little off from the day's lows. That's where some of these stocks are right now in trade. But Kunal, specifically on Godrej Properties, we all know what realty has been through as a sector in the last 2 odd years or 3 odd years, pick up whichever time frame. And Godrej Properties is one of those very light stories. What do you see now on the charts for Godrej? Do you think some more weakness is in store?
Not really. In fact, I think the stock had gone through one of the critical or the worst phases, I think in 2022-23. I remember, I think the stock was almost at 2,400, 500 levels. From there, it had fallen down to 1,000 or just about that 1,000 odd mark. So more than a 50% correction for a stock like Godrej Properties. And I remember, I think that phase, you had the likes of DLF, Anantraj, Oberoi Realty, etc. They were the ones which are making a very strong comeback. So there was a huge relative underperformance for Godrej Properties in that time frame. And now the stock from those 1,000 odd levels has picked up pace. It's come back to that 2,500 plus mark where it's trading right now. I would believe that going with the relative strength for many of the real estate names, that the story may not be pretty much over for the stock. I would probably believe that if there are any critical corrective phases like a 5% to 10% dip for a stock like Godrej Properties, swing low, I think those could be taken as good opportunities where one should look to add further. Typically, after such kind of a V-shaped recovery, when a stock falls by 50% and more and then recovers the entire sell-off which the stock had gone through, we expect that the stock gets into at least a 2 to 3 year uptrend and tries to replicate the entire corrective phase which it went through. So, which means positionally in the next 2 years or so, would look out for targets in the range of 3,000 to 3,500.
Okay, let's just take some closing strategies as well then. Naresh, what's on your list? Naresh, you got to unmute yourself.
Yeah, that would be a buy on Oberoi Realty. The stock has back to testing the multiple resistance around the 1550 mark. Today showing good momentum out here. Expecting it to break out. It's consolidated well enough. So expecting a breakout going forward.
Okay, that's Oberoi Realty. A breakout is what is likely. Kunal, what about your closing idea?
That'll be a buy on BHEL. After quite some time, we are finding the stock coming back into momentum. It's made a fresh multi-week, multi-month higher to 90 plus levels. So that's something which is interesting from a short-term trading frame.
Okay, on that note, we're going to take a very quick break. Come right back. We'll continue tracking markets on the other side.